Oh my gosh. That was funny. Where'd it go? Where'd it go? There was a spider just hanging right over my head. And then I just knocked it down with my shoe and I have no idea where it went. So that's funny. Come on, where is it now? You've gotta be kidding me. Where could it possibly have gone? Like where? It just disappeared from the face of the universe. I mean, from... Where did it go? You cannot deduct a prepaid business expense. You cannot deduct a prepaid business expense unless it has also met the economic performance tests with respect to the liability associated with the expense. Receiving goods or services from another person. When a business receives goods or services from another person, the business deducts the expense associated with the liability when the other person provides the goods or service. Assuming the elements test is met. Answer. However, there is an exception when a business actually pays the liability before the other person provides the goods or service. In this circumstance, the business can elect to treat the actual payment as economic performance as long as it reasonably expects the other person to provide the goods or services within 3.5 months after the payment. There is a 3.5 month there is a 3.5-month test for when a business receives goods or services from another person. So, yeah, I wish I could just, please. I want just a partial here. I just want. Okay, I can't. Okay. $300 per month. Okay, so he paid what? December 22nd. So for 3 months and a half. So for the month. So from January 22nd to January 22nd to February 22nd to March 22nd. So yeah, he can and to April 22nd. That the requirement is that anything April 22nd, and the 1,000 is going to cover 3 and 1 and 3 and 1/3 months. So we'll cover a third of April, so we'll be able to cover the whole thing. Therefore, you can deduct $1,000 under the accrual method and also the cash method. That was funny. And then in 2023, you deduct the rest of the. And then you deduct the rest of it in 2023. Come on! Hey! Not fair! How is this wrong? This doesn't make any sense. You said there's a 3.5 month exception. You said that. How come? You've got to be kidding me. This is stupid. It says 3.5 months. It says 3.5 months. You've got to be kidding me. It said 3.5 months right there. You've got to be kidding me. This is stupid. Why? You've got to be kidding me. This is so stupid. You've got to be kidding. Rick only contracted with Pickup to provide cleaning services for the first 3 months of 2023. Oh. When a business enters into an agreement to rent or lease property from another person, economic performance occurs over the term of the lease. You can deduct a rental expense over the term of the lease. In 2022, you deduct 8 months of so 6 times 8 is $4,800. Full $7,200 for cash method, because it is the 12-month rule. In the cash method, the 12-month rule applies. Oh, geez. For accrual method, you deduct 2 months of rent, and for cash method, you deduct 2 months of rent because it's for more than 12 months. So for accrual method, you deduct it over the term, and for the cash method, you deduct $200, and then you deduct the rest of it. What the heck? What on earth? What on earth? Never mind. Oh my gosh. Providing goods or services to another person is too easy. Accrual method, businesses incurring payment liabilities. Use cash method for all of these: workers' compensation, tort, breach of contract, or violation of law, rebates and refunds, awards, prizes, and jackpots, insurance, warranties, and service contracts provided to the business. Insurance, warranties, and service contracts provided to the business. Other liabilities not provided for. Receiving goods or services when they are provided or if they reasonably expect actual performance. Renting or leasing ratably over the time to another person when you incur the costs to satisfy the liability or provide goods or services. Payment liabilities when a business actually makes payment. Interest expense. As accrued. That's funny. Refunds. Hey. My goodness. Whoa. A refund? Ugh. Look, refund. Therefore, you recognize it in 2023. Oh my goodness. Great. Oh. The conditions required would mean it must not be material in amount, or it must better match 2022 revenue and 2023 revenue. 280. What the heck? There's a... You can deduct it because it says 2.5 months. It says 2.5 months. Come on. Come on! No, that's only for unrelated persons. For a related person, you cannot. Dang it. See, look, it's unrelated. Therefore, see, you can. For a related person, have to wait until they include it in their taxable income. And if it's unrelated, 2.5 months. Wait. I don't care. I hate this section. I hate this. I hate this section. What is the thing I need to study the most? Here. That's funny. I'm going to underline short problems because it's not even something. So, there's probably going to be one of these two, either 7 or 10. Business deductions versus personal deductions. I don't even know what that means. That's not specific enough, buddy. You have no idea what... I have no idea what that means. There's too many different ways you can interpret that phrase. Come on. Come on. Where on earth are you supposed to find this? Really? What is that? What is that? What, am I supposed to read every single deduction for individuals and then every single deduction for businesses? Like, you've got to be kidding me. You've got to be kidding. No. I'm just going to Google this. This is so dumb. I said it says deductions, not expenses. The hobby one is completely outdated. Thanks a lot, buddy. When was this written? Thanks, buddy. Thanks. When was this written? Now it keeps on generating new articles. No, tax preparation fees are not deductible either. What on earth? This is stupid. What? This doesn't help at all, buddy. This does not help at all. So I'm just going to underline it. Now we finally have only one more thing. Business. Well, not one more thing, but one more thing that is something other than the last two chapters, because the last two chapters I recently read. So I'm more familiar with them at this point. That was funny. Oh. Is this interest expense? Is that under the business deductions here? Or is it under the other one? That was funny. I don't see it here. What? Where's the interest expense deduction? Where is it? Business interest expense. I'm confusing business interest expense and investment interest expense. Investment interest expense is deductible from AGI, and business interest expense is limited. You have to limit it to the sum of business interest income and 30% of the adjusted taxable income of the taxpayer for the taxable year. The business interest income plus 30% of the business's adjusted taxable income adjusted taxable income is taxable income allocable. Business computed without interest income and before depreciation and interest expense deductions. I just did an epic triple X cross with a 3-move insert at the end. It wasn't that epic because it was basically just the same thing as doing every single pair as a 3-move insert, and you have to do extra D moves in between the inserts. Why did I just scream like you again? You disregard any item of income, gain, deduction, or loss that is not properly allocable to a trade or business, any business interest expense, or business interest income. The amount of any net operating loss deduction deductions allowable for depreciation, amortization, or depletion, and any deduction for qualified business income under Section 199A. Is he going to make us compute the adjusted taxable income? Come on, man. Please. Please. Business interest expense does not include investment interest expense. Business interest income does not include investment income. Suppose that at the beginning of the year he borrowed $300,000 to provide liquidity for starting up Green Acres. Suppose further that at the year end he reported $9,000 in interest expense on the business loan. In addition, he reported $70,000 of revenue from services and incurred $47,000 of other deductible expenses, excluding interest expense, and $5,000 of depreciation. Guess what? They did not make you calculate anything for this example. They just gave it to you. What amount of interest can you deduct? Do you just do 70 minus 47 and then that's the limit of the amount? Dang it. It says 9,000. It's not subject to the business interest expense limitation because their gross receipts do not exceed $27 million average. What if the limitation doesn't apply? What on earth? It's 30% of this. Wait, hold on. It says business interest income plus 30% of the adjusted taxable income. It's limited to 30% of the adjusted taxable income. It's limited to 30% of 23,000, which is this allowed will be carried over. If they're subject to the limitation, then you take the revenue, subtract the deductible expenses, excluding interest expense and depreciation, to get adjusted taxable income, which is a number, and then you multiply 30% times the adjusted taxable income, and that's the limitation. That was funny. Is that it for limitation on business? That's it. That's all I need to know for that one. The amount of deduction is limited to the sum of business interest income and 30% of adjusted taxable income. The adjusted taxable income, you can subtract the interest expense, depreciation, and it says you can subtract or exclude depreciation. In your expenses, you would exclude interest expense and depreciation expense and multiply it by 30%. That's the limitation for businesses that do not exceed the who exceed the $27 million test. Wasn't there another one here? Every single remaining topic is from chapters 11 and 10. Therefore, I'm going to study the quiz, and that will help you a little bit with that. Oh man. Oh my god. Oh. We still have like 2 hours left before we have to leave. Man. I don't even feel like studying anymore. Oh man. That's funny. Like I'd probably fine at this point because I recently read those chapters and I'll just go over the quiz. Maybe that's all I'll do. I'll just go over the quiz and that'll be it. Done. So I don't feel like doing anything else. Oh man. The 200% or double declining balance method is allowable for 5 and 7 year property through the base for a personal use asset converted to business use is the higher of the asset's cost basis. I don't think that's necessary because he didn't say anything about the basis of a personal use asset converted to business use. I noticed, I actually have that in one of these pictures. So if the property appreciated in value during its personal use, you use the basis, and if it declined in value during personal use, you use the fair market value at the date of conversion for calculating this. And that's how I was able to answer the question correctly for that. An asset's tax-adjusted basis is usually greater than its book. False. If a machine... So, this is a stupid question. If it's disposed of in the 7th year, it still hasn't been completely it's still not the end of its depreciation life. It's only if it's the 7th year has fully passed. So that's the stupid idiot me. So you must multiply it by 50% because it's half-year convention. Real property is always depreciated using the straight line method. True. The mid-month convention applies to real property in both the year of acquisition and disposition. True. If tangible personal property is depreciated, using half-year convention, disposed of during the first quarter of a subsequent year. False. Residential real property is not like kind with non-residential real property. No, they are like kind. It's, I don't know, it's like any, it pretty much just goes for any real property compared with any real property. As long as they're like around the same value or something like that. Stop. Business assets that tend to be used for both business and personal purposes are referred to as listed property. Depreciation recapture changes both the amount and character of the gain. False, it only changes the character of the gain. Which of the following is not usually included in an asset's tax basis? Actually, all of them are included. Purchase price, sales tax, shipping, installation costs. So, I know how to do this. It's too easy. This one. So, if you sell land, it's going to be 1231 because it does not depreciate. And if it's used in the business. So it's going to be 1231. And sold equipment. So the amount of depreciation, that one I know how to do. I was able to do it just fine yesterday. This one I was an idiot because I misread the question. I did this one earlier today. the reason I got this one wrong is because you must use the reason I got it wrong is because I thought that it was disposed of in October 2nd, but it was actually disposed of on February 27th. So you're allowed to claim 1.5 months of depreciation, and 1.5 months of depreciation is going to be equal to $641. So is there anything else? Section 1250 recaptures. Section 1245, Section 1231. Schedule. What is included? I'm just going to, whatever. What is included in the different schedules? Schedule A has Schedule A is itemized deductions. Schedule A is itemized deductions. Schedule, what is it? Schedule B is interest and ordinary dividends. Really? Schedule B is interest. Is it interest? Oh. Hey, look, it says only if you had over $1,500 of taxable interest or ordinary dividends. So Schedule B is interest, ordinary dividends. Schedule C is going to be business income or something. Let's see. Income or loss from a business you operate or a profession you practice as a sole proprietor. Schedule D is going to be capital gains. Schedule D is the sale or exchange of capital asset not reported on another form of schedule. And Schedule E is rental. Income or loss from rental, real estate, royalties, partnerships, S corporations, estates, trusts, and residual interests in real estate, blah, blah, blah. I'll just do Schedule 1 through 3 just to be on the safe side. Schedule 1 is going to be additional income and adjustments to income. So Schedule 1 includes additional income and for AGI deductions. So Schedule 2 is what? I'm trying to remember. What is it? I don't know. Additional taxes is Schedule 2. And then Schedule 3 is credits. I'm not even going to look that up. So Schedule 1 is additional income and adjustments to income. Schedule 2 is additional taxes. Schedule 3 is credits. And Schedule A is itemized deductions. Schedule B is interest and ordinary dividends. Schedule C is business income from sole proprietorship. Schedule D is sale of capital assets, and Schedule E is rental property, or it's going to be basically passive income. That's fine. So, like Schedule E is supplemental income and loss. from rental, real estate, realty partnership, S corporation, estate trust, blah. Oops. Okay, you know what? I'm done. I'm done way early, but I'm glad. It's still better to have gotten up too early than too late. Now what do I do?